All right, good morning, traders, and happy new trading week to every one of us. And of course, I wish you all a prosperous trading week. So we will have this meeting, and it's going to be quite brief. All right, I just wanted to share. With us what my current outlook on the markets is and how to properly engage in the market. Now, of course, we will be having fewer meetings as the year gets to a conclusion. This is because we've mentioned earlier how that by December of every year, investors are usually out of the market. And so there will be lots of erratic volatility, which will affect price movement. So before I continue, please, I need to know that you can hear me. I can see one person cannot hear, so I don't know if it is general or probably just one person. So if you can hear me, please use the comment section and respond that you can hear me so I can continue. Those who aren't here would obviously get the replay. Okay, thank you, Dave. Great, thank you. All right, so let's continue then. Okay, so let us continue. It is what it is. Now, essentially this week, of course, for a while now, we've been looking at DXY, and I do tell you that one of the coolest thing to do amongst other things, if you are trading, of course, you know I only trade GBPUSD, Euro USD, and gold, right? And so I mean that's for my personal account. Now, if you are trading the USD related pair, I usually would tell you that you want to do your analysis first from the DXY, DXY being a dollar index. And if you can get a clue on what dollar index is doing, then you just have to transpose that to your GBPUSD and the rest. Now, as at the time of this recording, I am missing out on a trade, and it's crazy. I would send a screenshot of it, but then there's a way to actually participate in this trade. So I just screenshotted something in one of my small accounts, and I'm posting it across all the platforms right now, so you can see what I am looking at. So it will be more practical, and yeah. So let me do it across all of the platforms. I'm going to tell you why I'm doing this shortly. Inner circle. All right, so obviously as of Monday, I had this outlook for the DXY. I'm going to go to the daily chart and share that with you. Just a moment. I'm still here, please. Just a moment. So those of you who are in our inner circle, I did posted an information, right? That was yesterday regarding what I'm looking out to trade. Oh my God, this trade has left the station. Oh my God. This trade has left the station. I missed this trade by an hair. If you could see the screenshot I sent to all of the platforms, GBPUSD, obviously. Of course, that's one of our small challenge accounts that we're doing. You could see how, I don't know, it was a buy limit order, so I don't even know why. Well, it happens, right? So we're going to get another entry. It happens. So let's get back to what we're looking at. Now, this is the dollar indices, right? The dollar, and obviously we are heavily bearish, but then we had this is a weekly chart. So we had 1-2 week of retracement and upside after liquidity has been taken out. So it is liquidity from price moves from liquidity to liquidity. All right, so you need to have an understanding of market structure. All right, I don't intend to do a lot of teaching and talking today, but then you can clearly see there is an order block right there from the weekly chart that dollar went all the way. In fact, as at when this price was running here, those of you who have been following for a long while, we did mention that that high will be taken out, that liquidity will be taken out. So this pullback took out liquidity, reacted nicely off the bearish order block. Now, there is no doubt in our hearts that after the price react from there, where we are coming to next, we are coming to this bottom. So dollar is going to be bearish to this level. We have said that over and over again. And now you have to have that narrative in your heart. You need to know and follow the narrative. You have to know and follow the narrative. However, it's not going to get there it's not going to be a straight movement, right? It's not going to be a straightforward movement. So you now have to understand the possible turning point. For example, dollar started selling from that level, rallied all the way to the took out those lows. If I go to the daily chart, you see that is a very important low. I'll do that shortly. So you see dollar went, pulled back, went all the way. Once this low was taken out, what did we see? It retraced back. Now, where did it retrace to? There is a fair value gap from that candle's low to this candle high. Let me take out this line so it will be more clear. So I took this out right now. So the fair value gap started from that candle's low, where I just put that line, and then the high of this other candle right there. All right, so I'm going to extend it in time so you would understand my fair value gap. Right, so that's a fair value gap. Obviously, if you don't know what that means, we have tons of videos on our YouTube that we did talk about that in clear terms, I should say. Oh man, I'm just biting my fingers for this trade, but I'm still gonna get in. Let me turn off my chat so I won't be distracted. So we have that fair value gap right there. So what did we see price do? Okay, price moved still on the weekly chart, took out this low, pulled back, notice the high of that fair value and the fair value gap range, as it were. All right, now in fair value gaps, you've been taught, or it's in our channel, when you have a fair value gap of say this size and price is coming back to it, price is not obliged to fill up the entire fair value gap. It can just fill up, come to just the beginning or the midpoint, or fill it up. So it's optional, right? Depending on what price wants to do. So notice that high of that candle, and notice last week dollar, right, just spiked above this high. It is now left for the algorithm to want to continue being bullish till it fills it up before it comes down, which was what I expected. All right, as at yesterday being Monday. All right, but then the price is always right. Price is always right. Okay, so we have that, and then this week price just if price had taken out the high of last week, all right, then you can be sure that we are coming to at least the midpoint 50% level, or even that extreme before it drops. So as of yesterday, price failed to take out the high of last week. Okay, now let's go to the daily chart. All right, and you can see it more clearly here. From the daily standpoint, you can see this is a bearish order block. That green candle right there, all the way to that bottom of the candle. So that's a bearish order block. All right, and obviously before the bearish order block, there is a high right here. I'm going to use another color. Okay, there's a liquidity right there that price grabbed. All right, and just like we saw it happen in the weekly charts, it is transposing or happening in the daily chart. What we notice in the weekly chart, we noticed there was a high right there and there was an order block right there. Price went, took out the high, reacted off the other block, and we're expecting the sell. All right, so also in the daily, we have a high and we have an order block there. Price took out the high, reacted on the other block, and they were expecting the sell. Now, how far will this sell go. Obviously, from the daily standpoint, you can see where we are headed. We are headed south, right? We're headed south. We're headed south to this level. So that's why earlier in our videos, we did mention that we are looking for buy opportunities for GU till the end of the year, even till January. Okay, so that being said, let's now go further. I wouldn't want to go further, but let's just do a top-down analysis to guide you further. Now, I'm going to go to the 1 hour time frame and further flesh out something to draw your attention to. So this is the 1 hour chart. Of course, we know we are headed south. So anything you want to look about or anything you want to look at right now is sales. All right. Now, from the 1 hour perspective or time frame, we see there was a failure swing. This swing below here failed to produce a high that would take out that high. If that high was taken out, then, like I said, would have gone way above. But now, at the moment, we have price taking out. This low has gone. All right, so this is what we call change of character or market structure shift. But just above, my bid is broker anyway. There is a volume imbalance there. Can you see that space? So from dollar, so that is why, and this is going to be the reason why I will not jump into buying GBPUSD because it is flying. All right, because there's going to be a pullback. Dollar is showing us there is a volume imbalance right there. It's most likely going to be a pullback to that volume imbalance to that level, and then the sell continues. And notice above the volume imbalance, there is a high right there. So people that are jumping in very late in the entries, right, and don't understand the market, that pullback will take them out. It's certainly going to take them out of the market. So this is our expectation for DXY. So my mind, or what's next for me, is to go to GBPUSD and transpose what I have seen from DXY. So let's just do that quickly. GBPUSD, let's see, a broker, FSCM, right? All right, so this is GBPUSD. I would have, okay, let's just do quickly from the daily. We already know we are bullish, right? From the view we got from DXY. Come on now, load. Why are you delaying? All right, so this is very good. This is what we actually did some weeks ago. All right, and it's clear. I've already given off my trade. So if you're joining us for the first time, you can actually screenshot what you can see in front of you, right? You can screenshot that because that's our destination. All right, this is our anticipation, our destination. Okay, we are coming here. This is a daily chart. Okay. So all things being equal, what can we see from the dailies, right? Obviously, just like we saw in the DXY, this is a bullish order block. The price reacts from on Friday. Then yesterday it dug into it, and today we are seeing that push. My immediate take profit area would be this high. Okay, but if I want to swing for swinging, this would be a very nice TP zone. Very nice TP zone. So how do you participate in the buy to that level? Like if you're part of our mentorship or our masterclass, some of the things we have simplified trading to two things. Apart from your psychology, which is very important, the next thing you want to think about is get your buyers. Then that's number two. Then number three, trade the buyers. So we have gotten the buyers. To the last part is to trade the buyers, and trading is easy actually. What makes trading difficult is the human factors, the place where we interfere with trades. All right, the human factors and all that. So the gray area, the gray box, is or indicates what the order block from the daily. I think I'm going to download this video and upload in my YouTube channel for a bigger reach of audience. I don't think this video should just be here. So the gray area is what our order block. Then we have, remember, we are bullish, so you want to look out for swing points, and I don't have time to explain that. If you're following for probably on the YouTube channel, we have videos that talk about market structures and swing points, but just for completeness sake, you have that swing high and this low. This was, or these are swing points. Once this high gets broken right there, and this happened yesterday, right? Once that high gets broken right there, and it was not broken with a wick, it was broken with the body of a candle. So you can see the candle that broke it nicely, even though it didn't continue to the upside, but broke it nicely, right? With the body, full body. That indicates a change of direction to your expected bullish momentum, right? So this showed or indicate that we are most likely bullish. And of course, yesterday, if you follow through, I'm using the word yesterday because we have a challenge signal room. All right, we did take this sell from this level to around that level. All right, we sold. But I'll leave a screenshot on the channel if I have that time to edit. But I don't think I'll do that anyways. So we did take that sell. So, but then the important thing is that that high was taken out, price pulled back, reacted off this order block right here. I would have wanted price to come all the way to take out this liquidity to form our type 1, but no, it didn't do that. It reacted off the order block, came this way, pulled back to that level, and then we are currently here. Just like what we saw in DXY, it would be wrong to start buying from this area. We saw that DXY had or left a volume imbalance below. All right, and the way I can transpose this is, if I'm going to trade type 2, the beautiful way to cash this entry would be, I want to see this high taken out there. Once that is taken out, then this low that was formed here. So I want to see price take this high, come down, take this low, and then that run. So it's going to be more like a whipsaw movement. Other than that, because of the pullback we're expecting dollar to do, this low that was formed, people that didn't enter initially, this low is a target, right? You know, we saw DXY going down to do something. So that low is a target. So that is where you can place a buy limit, right? So I'm going to adjust my buy limits that were all the way at this bottom. I'm going to adjust it around that area. And then your stop loss can actually be here. Okay, stop loss can actually be there. So you can, if you want to buy there, which is good points to buy, or better still, to be very, very safe, you can put it right there, just below that structure. That's 20 pips stop loss. If you look at it, 20 pips stop loss. I don't know what your account size is. 20 pips stop loss, and you're targeting that move, right? And that's 169 pips, a nice 1:8. If you're watching this now, you can target that immediate high, or you can swing to that expectation we have been looking for. This very long swing, and that's 1:27, 1:27. But then I would always tell my guys, pay yourself along the way. So this could be a very nice immediate target, 1:8, right? So I don't know whether you are trading a prop firm account or whatever, 8%. I'm not saying it's 100% anyways, but then getting an 8% return for a trade is amazing. And this could be all you need for the month of December. Do you agree? So, like what I like doing, because I'm expecting stop loss to be up to this, I can put another buy limit at this area. Okay, I'll share my buy limits there. All right, and just allow it to. So I'm going to do that right now. So if you are watching the replay, you already know my expectations and what I am anticipating. And I did send the buy limit trade I took earliest to all the platforms. If you're watching on YouTube, you don't have access to our Telegram general channel. I'll leave it on description box. And those of you who came in from Telegram, you're already there. So once often we would be sharing stuff. So less is more, and that's why I'm going to conclude this video. Less is more, right? You don't need to trade 50 pairs. You just need one, then stick to it. All right. I know the fact that you can trade anything based on your analysis can be quite fascinating, but it's also deceptive. You want to be as selective as possible. All right. So this will be my expectation. Now, let me give you a final lead. All right. Alternatively, what other means I can trade this with? If this price action goes all the way to take out that high, all right, what I would do, like I've taught my students in our inner circle, is you want to evaluate this pin, this week. And how do you do that? Let's assume price move from where it is to taking out that high. What I'll simply do is to put Fibonacci tool from the beginning of the week to the down part of the week, just like as I'm doing right now. All right. And then expect that the 50% level of that week is going to be your next buy. So I just marked out the 50% of that week. That is if price just runs to that top side and the momentum is high, you just evaluate the week, and instead of expecting, because price may not come all the way to this down again, because if I go to 15 minutes time frame, let me do that to show you something. They have swept liquidity already at the 15 minutes chart. Let's do that so you see that. So this is 15 minutes time frame. Let me take out this so you get it clearly. So there was a news release, and you can see clearly the results of that news. Okay, you can see this long wick. What it come to took out this low here, and this is where I wanted to buy from. I just decided to put my buy limits at this fair value gap. Of course, you could see my screenshots. I don't need to explain myself further. The spread opened up and I wasn't filled. So in my mind, the damage has been done. They have taken that this liquidity. So really coming down to this level again is a bit too superstitious. It's a bit too over ambitious, right? Because they have done the damage. So I can as well do what I want. I talked about already. Evaluate the okay. I think I can do that here now. From 15 minutes, you can see, let's try and evaluate that area all the way here. And okay, it aligned with what we have in the 1 hour. So this area, all right, is a very good opportunity for buys. So I'm going to adjust my, okay, I'm going to adjust my, one of my entry will be there. Then if I'm doing that so that my stop loss will not be very big, you see this, if I'm going to be buying here, right, with that expectation in mind, all right, then I can safely put my stop loss just below that area, all right. So I'm expecting this to happen. Maybe it can be a bit ambitious down and then continue, because you must trade with a logic, right? I am seeing that damage has been done here already, all right. And okay, let me do a final thing. Check euro dollar. What's euro dollar looks like? Okay, I think euro dollar aligns with what I'm talking about. Euro dollar aligns with what I'm talking about. But then don't bother to check what I just did. Some of the stuffs, these are some of the stuffs you'll be learning when you are part of our inner circle, and to be part of it, it just depends on your budgets, right? You can go to our website, www.golfcoursefs.club/enroll. You can book a training for one-on-one with me, right? That space is extremely filled already. So I think I just have one slot or thereabout for a trader. Or you can actually be on a lesser budget and still very effective, part of our inner circle. All of our programs, you have access to our inner circle, right? Inner circle is just a fancy way of talking about where we interact, okay? We decided to make this a general class so people can actually know what we are looking at, and most likely you can profit from this knowledge. It's free, basically. Yeah, but if you want to learn more, right, there are some things I can do here, but it's going to be beyond the scope of the analysis for this morning or for this trade. So you can visit the website, fill the form. If you are qualified, I'll contact you and you get to know. So I think the price ranges from between $49 to about $700. So depending on your budget, we can look at that with you. All right. So that's about that. So again, I'm adjusting that buy limits there. All right, because I've valuated that range, and my stop loss can be there. I'm going to put my stop loss right there. All right, and take it from where it is to where I want it to be. So this is it, and of course you have the expectations, right, of having this trade becoming bulls. Now, finally, please, there are no 100%. All right. Don't be anxious to trade. 100%. That's why you see what I just did right here. Your risk management must be tight. If I'm trading from where I want to trade, I don't do more than 1%. If you do less than 1% is even better. You can do 0.5% of your account. And just if you are thinking about risking 1% of your account is $100, 1% is $1. So what loss side will you blah 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 blah. Well, that is where you have prop firms accounts. That's what you have. That's the reason you have them. That's your original leverage, where you can with $49 get a 5K account, $90 get a 10K account, and just trade. There's no rushing, no hurrying, whatever. All right, and leverage on those stuff, leverage on those opportunities. All right, so I'm going to stop here. If you have a question, you can send them in the comment section. You can send me a message. If you are following from Telegram at Blessed Man, you can send me a direct message. That is my Telegram username. You see Okoli, but then Blessed Man is the handle. Is it Blessed Man or Blessed Man now? It's Blessed Man. Blessed Man. All right. It's Blessed Man or Blessed Man. I'm getting confused. Okoli. All right, you see there. That's how you know I'm the one. Then if you're following on all of the other platforms, you can always send me a message on WhatsApp directly. And more importantly, you can start with a page to know more about mentorship. We're going to be now, finally, as I conclude, on whether or not we are actively trading, right? But it's not for everyone. We also have another plan that has to do with trading with me. Although for 2023, we are closed with that. So I'm going to keep that details for the next video. So let me just append this. It will not be too much information in one video. So thank you for joining, and I do hope you make the most of this opportunity. And one of the things will be happening in 2024 amongst our inner circle will be live trading, right? So we put the trigger together, we start looking. Those can be very boring. You can sit on the chart for 1 hour, 2 hours, we are done. All right. So I'm looking forward to see you all in our inner circle. If you have not yet purchased our material, $5, you can start from there as well. You can do that via our website. And I'm looking forward to having you all in our community. Cheers. I'm going to end the meeting now. All right. Thank you all for joining.